Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are talking price patterns. In fact, today we're talking about price patterns. Next week we're talking about price patterns. And the week after that we're talking about price patterns. So it's price patterns galore in Getting Started with Technical Analysis. And today I was hanging out in the chat with James Boyd for his investing masterclass series. And the way he started that class was saying it's really important that you can recognize trend and changes in trend. And that goes for both the market and individual stocks. And so these price patterns help us identify trends and potential entries and exits. So today we're going to talk about flag patterns. Next week, I think we're going to talk about pennants and triangles. And then the week after that, we'll be talking about trend reversal patterns. So yeah, a lot of price patterns will be coming your way. I have the privilege of having Connie Hill with us in the chat today. She's a friend and a fellow coach. And she is, you know, she has got her senior patch, if you will. She is a certified market technician. So she understands charts like you wouldn't believe. If you've got any questions, don't hesitate to ask. And between Connie and I, we should have answers to this. If you are a newbie to all of this, as Tim is saying he is, one, welcome to this class, and two, know that you are in exactly the right place. And I'm excited to teach this class because I think it's kind of like the I-Chi, the one thing, you know, that if you want to be an active trader or investor, understanding the charts is a very important thing. And it's what really got me excited back in 2011 when I saw my first stock charts at really diving into this world. And I've been there ever since. So if you are not following Connie and I in the land of X, you are missing out. We're both posting lots of interesting content, including charts on a daily basis there. So come and check us out at Barb Armstrong CS and at Connie Hill CS. And know that everything that we cover here is for general information purposes only, none of it to be construed as a recommendation of any particular chart pattern or investment strategy. Also, you know, I'm not sure that we'll do an options trade today, but know that options carry a high level of risk and aren't suitable for all investors. We will use the paper money software application on the thinkorswim desktop platform for our examples. And there are some nuances and differences between the paper money platform and the live account, you know, and we'll discuss those as appropriate. Know that if we use a stop order, it doesn't guarantee that we're going to get out at the price we request also. And so that's important to know. So I designed this class to be taught in about a 9-week rotation, and we're kind of in the middle of the pack right now. And then I usually will add a bonus lesson, if you will, at the end. The last one that I did, and if you missed it, I'd encourage you to go back and check it out, was, you know, the things I wish I'd known about trading, the 7 or 8 things I wish I'd known about trading when I got started. So you can go check that out. Sometimes we'll throw in something like trading on Fibonacci's or something like that. So sometimes we have a couple of bonus sessions at the end before we go back to the beginning. But each one of these are independent. And there is a playlist with the entire rotation in it. So you can go back and do a little binge learning. And that's one of the reasons you'll want to subscribe to the channel by hitting that subscribe button in the bottom right corner. It's a free resource. And that's where all of the playlists live. So, and today, like I said, we're talking about flags. Next week, pennants and triangles, and then we'll follow that with channels and reversal patterns. So we're going to look, you know, spend a few minutes on discussing what price patterns are. Then we're going to, you know, look at several examples of these flag patterns and then look at those on the charts. Somebody's asking about where to find the past recordings. And so if you go to YouTube and go to the Trader Talks channel on YouTube, Trader Talks from Schwab Coaching, when you bring it up, it will look like this. Okay. And what first comes up is what's currently being taught. Okay. And then if you come to the playlists, and you scroll down, it's actually, I just happen to know because I teach this class, it's close to the bottom. But here is the Getting Started with Technical Analysis playlist. And if you click full playlist, it will bring up the list. So you can see here was, intro to charting, the basics, lesson 1, lesson 2. And then I have this whole series of short videos I'm doing on candlesticks. And we're just kind of putting those in as I do them. But if you want to see those in a group, I have something called the Trade Management Mini Sessions, which was just a way for me to provide additional content. So it's called the Mini Sessions, and all the ones in this turquoise or green, whatever color you want to call that, I guess it's more green. So the candlestick patterns are at the top. We have 9 in the collection so far. There's probably another 9 to come. If you haven't watched The Power of Compounding, I'd recommend that. And then there's a bunch of example trading plans. So there's a simple stock one, there's a bunch of different options ones, and then at the very bottom, in kind of that aquamarine or turquoise, there are a bunch of short videos on, customizing a watch list or a chart. Or so if you're new to all of this, there's another kind of handy resource as well. Okay, so that's where you find that. And Connie, thank you she just posted a link to that in the chat. It will also be in the show notes if you're watching this in the archives. Okay, it'll be in the show notes, and there will be a link to it at the end of the webcast. Okay, so what is a price pattern? Well, price patterns are created when you have a horizontal and or a diagonal support and resistance, they kind of get together and create a shape. And each type of pattern has a unique shape, if you will. So I was posting things on X earlier, pardon me. So, today we're going to talk about flags. So a bull flag, we have a stock that's uptrending, and then it pulls back for a few days, and then it continues to uptrend. And so here is the flag pole. And then this we call the flag. And if it's downtrending, we call that a bullish flag. If the stock is downtrending and then kind of rallies and then continues to fall, that's a bearish flag. And, sometimes we'll have, a series of higher lows, which is what we're seeing here. And then what starts happening is the stock starts to consolidate, and we end up with this kind of pattern where we have, maybe it was uptrending, and then we end up with, lower highs and higher lows, and then that forms a pennant. So we're just looking for these different patterns, and they can occur over different time frames, and they can help us establish targets and also entries, and they can be in any time frame. So, it can be over the course of a day, it can be over the course of a week, it can be over the course of several months or several years. And some patterns generate entry and exit signals, and we'll talk about that, for swing and trend trading. And, others can help identify reversals. So what I posted today, I think it was an example of a pattern, a trend reversal pattern where the stock had gone down and come up, and then it came down and came up. And so we see this horizontal resistance line, and then it broke out. And we call that a cup and handle pattern. And that was on IBM. Yeah. Greg is saying, I'm going to get back at James. Yeah. So today it's ironic that I'm talking about flags because, I posted a picture on X of all my flags. I got over 40 flags, and I'm going to physical therapy today, and then I'm going to stop by James's and finally plant a few flags. Yeah, so stay tuned. I'll take pictures, but shh, don't tell them. Yeah. Okay. The biggest non-secret on the planet. James and I love each other. So It's all good. So, with targets, we can use price patterns to help us determine targets. And so we're going to talk about how we do that as well. Okay. So here's a bull flag, and so we have a stock that was going up and then it started to consolidate. So here's our flagpole and here's our flag. And these candles, they could be candles by the minute, 1 minute candles. These could be daily candles, 1-day candles, or each candle could represent a week. And when do you use which type of candle? Well, it depends on what you're trading. Do you know what I mean? Like, so if you're looking to place a short-term trade that you want to be out of in a week to 2 weeks, then maybe you want to look at a daily candle, where if you're looking for a long-term investment that you intend to hold for years, then maybe a weekly candle. But overall, when we're looking at a bull flag, the trend is bullish, because the stock is going up. And the time frame, it can be days to weeks. Typically I'm using, a year-to-date chart. And we're doing, shorter or intermediate term time frames. And then we have our flagpole here. There's our pole. And, here's our flag. And where's our entry? Well, we call this, when it breaks resistance. So if it's been coming down, some might say, okay, I'm going to enter this. If we consider this here to be the low day, right here, I want to see a close above the high of the low day. Now, others might say, well, remember when you talked about candlesticks the other day? This is also a bullish engulfing pattern that doesn't require confirmation. Now, so even if it didn't close quite above the high of the low day, you might say, that's a legit entry. But when we have, a break of that resistance or a sign that the pullback may now be complete, okay, and, it's breaking out. And how far might we think it might go? We might say, well, we're going to say if this flagpole is about $10, then I'm going to look from here and I'm going to go $10 up. And that's going to be that's how I'm going to calculate my target. Okay. Now, bear flag, well, we're just going to flip it and reverse it. Somebody sang a song about that, didn't they? And what do we have here? Well, is it bullish? No, it's not. It's bearish, which means downtrending. So, and again, here's our flagpole, and here's our flag. And if we're measuring an expected move to the downside, how might we do that? Well, we might say, hey, if this flagpole is $10, long, then I'm expecting a $10 move to the downside. Now, could it move more than that? Sure. Could it move less than that? Sure. Just a guideline, place to kind of put a stake in the sand. Now, some, we talked about swing trading, right? So when you have this come and we're looking for, here's our high day here, right here. We're looking for a close below, some people will call this a kablode, the low of the high day. And we got that the next day. And so that might be considered our entry. And again, time frames can vary. And the construction, we've got that flagpole, and then it starts to retrace, that creates the flag. And we're looking for not a break of resistance on this, a break of support, which is saying it's now continuing to the downside. And then we're going to calculate, one of the ways to calculate a target is that same way. Now, if we were doing this as a swing trade, what might our target be? So this might be our flag target. A swing target would be the previous low. So you might enter here and make this your target. So you might say, okay, we're going to start here, and our intention is to get out when it comes back to this previous low. And we've done a lot of swing trades in our Getting Started with Technical Analysis lately. And, you know, so if we come back up here, and if we were to do a swing target as opposed to the flagpole target, we just draw a line across there and say, okay, if I'm getting in on this day here, I'm not looking for a big move. You know, I'm just looking for it to go up to the previous high. So a very short-term target. Well, why might you do that? Well, maybe you're just trying to earn a little money, like the line that I've been using lately is you want to come to the Anaheim Market Drive and then go have some extra cash to go to Disneyland afterwards. So you're not looking for a long-term investment that you're going to keep for years. You're looking for a little extra cheddar that you can, you know, take out for the Christmas holidays or to go to Disneyland or, you know, whatever it is. Maybe you want to go and see the Dodgers, hang out with Jason Bateman and and the other celebrities who were all at the game last night for all 18 innings worth. Yeah. Okay. So bear flag, bull flag, pretty simple. So let's go out and look at the charts. And let's start with a few. I always start with the bullish because I tend to be a very optimistic person. For those of you, so J Money is saying, how many successful trades have you made and on what? So, you know, I cannot comment on what I do in my personal account, but we do have a trading a smaller account. And, you know, we had 2 successful trades that hit targets on that today. It was a swing trade on NVIDIA. And we talk about our results, good and bad, on that on a regular basis. I will tell you this, not every trade is a successful trade. But if overall you have, you know, more winners than losers, or you make more money than you lose, it's amazing how these little bits can add up. So we did a swing trade where we bought the stock and we had a target of this previous high around this 195. And then we also bought a call on that on Friday. So we bought the stock on Monday, the call on Friday, and it came up and hit our target. And so this was a swing, what we called a swing trade. And, you know, let's use this one as an example, you know, of, you know, looking at flags. So, and let me just change my color here. So, you know, we had something, it came up and then it pulled back for a few days. And then, you know, it's not that every day is necessarily bullish. Came up again, new high, pulled back for a couple of days. You know, came up, pulled back for all of one day. You know, came up, pulled back for 3 days. Came up, pulled back for what? 1 day. And then we had a close above the high of the low day again. You know, and then we've had this kind of run to the upside, pulled back, up. And then this is where, you know, the pattern changed, and that we had a bit of a pennant pattern setting up, right? Where we had some lower highs and then it broke out. So we looked at this as a diagonal resistance breakout. But, you know, it was a swing trade. Okay, so J Money, I really like your questions and I like the way you're thinking. What I would suggest is that you come to the Trading a Smaller Account class on Friday at high noon and Monday at high noon. In that class, we usually look at trades. We're going to use a a 1-day chart. And we're typically looking at trading days to weeks or occasionally months, but not often. Okay. And in that class, we started the year with $25,000 and we weren't willing to risk more than $500 on any one trade. So here was the NVIDIA trade. On Friday, we bought that call for $5.15. We sold it for $9.55. Now, how much could we have lost? All $515. That was the risk that we took. Now, we put a stop in at 50%, but had NVIDIA gap down, we could have lost it all. And then we bought 27 shares of stock, and that hit that. We had the same target on both of them. If it got up to 185, I think it was. So now, do I feel like a loser because the stock's trading higher than that? No, we had 2 profitable example trades. So I'd encourage you to come and or go to some of the other classes. Like Connie right after this is teaching a class on swing trading. Whole 45 minutes just on swing trading. And so she'll talk about that position sizing and, all of that stuff. But yeah, the purpose of this is more for us to be, kind of looking at the charts. It's technical analysis. So, with, and we're going to start with Verizon. So with Verizon, we had something that kind of had a great fall, right? Oh, I didn't mean to do that. So, year to date, this stock is not up, and all the major indices are up and either hitting new highs today or close to it. But, we had something that fell. Okay, so there's our flag pole, and then it rallied for a few days, and then it fell again, and now it's rallied for a few days. So if you wanted to do a bearish trade, could we do a swing trade? We could. And what might the target be? It might be this, 38, maybe make it 38.50, just above the previous low. But what don't we have here? What are we missing? I know you guys know this. Some of you may not if you're brand new. What are we missing? Well, we don't have, we've got the flag, we've got the flag pole, we've got the flag. Well, we've got earnings coming. Yes, we do. But the other thing that we don't have is a confirmation of trend continuation. So here what happened is it fell, it rallied, and then remember when I said we were looking for yes, Julia, you've got it right. We just had to flip it and reverse it. The close below the low of the high day because we're bearish. So far we have another flag pole, and the flag is being created, but we don't have this yet. So we could put in, an alert to say, hey, let us know if this goes back below 39. Or we could just put it on a daily watch list and watch it. Yeah, Kevin got it. We're looking for this entry and we don't have it yet. But we've got the flag setting up, so it might be of interest to us. And what might we do? Well, we could, buy a put, which will be profitable if the stock continues to drop. It has the potential to be profitable if time decay doesn't get in the way. If it doesn't take too long to get where it's going. How about we look at Match.com? Not a recommendation per se, but, again, we had something that was falling. And then it's kind of rallied here and is starting to fall again. Now we have earnings coming up. And what happened, with technical analysis, the trend is your friend until it ends. it would go up, come back for a few days, came up, came back for a few days. So these were bull flags, right? And then it started to consolidate. Or you might say, I wouldn't have drawn my line like that. Okay, I hear you. So maybe you say, you know, it started to consolidate. So we started seeing kind of lower highs instead of, you know, all these higher highs with these bull flags. And we were seeing kind of similar lows, and then it broke to the downside. And then we started seeing, you know, now bear flags. So the trend is your friend until it ends. Okay, how about we come over to the bullish side of the street, given, you know, if we look at the S&P 500, it's hitting a new all-time high today. So we couldn't do a swing trade on that. It would have nothing to swing to, right? But, you know, have we seen a number of bull flags here? It's just been kind of marching up the hill, and then it pauses and takes a breather. You know, so up the hill, down for a couple of days, up the hill, back for a couple of days, up the hill, back, flag, flag, flag. Notice I'm saying flag, not fleeg. And then, you know, this came back. So is this a higher low? No, this is a lower low. So then we had this little pennant set up. And then it broke to the upside 3 days ago. If a flag is partially below the trend line, like, you know, this became a pennant, I would say, or a little triangle. And it depends on, you know, what timeline you're using. You know, this kind of came down and kissed this, but it looks like this red line is a 30-day moving average. It looks like that's really been acting as a support level, you know, hasn't it? Okay, so that's the S&P 500. So let's come and look at CAT. So this is Caterpillar. And do we see, you know, a pattern that we've been talking about here? I would say, yes, we have. You know, because we've got this, you know, uptrend, and then it pulls back for a few days, uptrend, pulls back, uptrend. And you know, sometimes it kind of goes out almost straight. You know, we call that like a bull flag and a stiff wind. You know, still a bull flag, and then up again, and then has come back. Now, it's currently trading at 529. If you wanted to do a shorter term trade, you know, and we had this pullback and then this candle pattern, if we kind of hone in on it. Yeah, you're right. I'd say that's the flag. We had this bullish harami when it came down to a potential support level, you know, let me just use my drawing tool here. Old highs, old resistance becoming new support. And then we have this harami pattern. Some might consider that enough on its own, but our high on this day was 525. And if we're looking for a close above the high of the low day, and this was the low day, we would have had that yesterday when it closed at 527. And now it's trading at 529. So, you know, if we wanted to do a shorter term trade, we could buy some shares of stock and just put in a target that's $15 above. Now, somebody's saying, yeah, earnings is tomorrow morning. And so, you know, you may not want to place this trade just prior to earnings. And in fact, when I first started learning how to trade, I created a checklist. If you go back to that trade management mini session, we created a simple stock investing plan here in this class. And I did an additional complimentary video to that I posted in there. But I created this checklist. Is the market uptrending? Check. Is the sector uptrending? Check. And Is the stock uptrending? Do I have an entry? How do I position size? And the one thing I didn't have on it was earnings. And I talked to a coach and they said, well, did you notice that earnings is tomorrow? And some people might not want to buy a stock right before earnings. But if we wanted to put this in just as an example, so what if tomorrow it gaps up and it triggers our exit? Well, if we got out and we made a little money, might we be okay with that? Now, what's the downside? Is it could gap down. And does this stock tend to gap? Well, we can do that just by kind of having a look. Well, here was an earnings and it just started to move to the upside. Here was an earnings, kind of gapped down a little bit and then continued to move to the downside. Here was an earnings here. Seemed to be a pause. So it's kind of a mixed bag. But we haven't seen like big gaps per se. But we've seen certainly other stocks, we've seen gaps, seen them gap, right? Yeah. So you may not want to place this. Now, sometimes it's just like International Flag Day. Every stock you look at has a lot of flags happening or a lot of flag setups if we've had a bit of a pullback. But with the market, right now hitting all-time highs, what we're seeing is a lot of flag polls without the flag, without a current flag attached because the S&P 500 is hitting an all-time high. When we saw this little consolidation period, there were a lot of flags potentially forming then. But now, not quite so much. The NASDAQ hitting an all-time high. The Russell close to it. And the Dow hitting an all-time high. So we're more likely to see this type of pattern where, we had this move to the upside. So we're seeing, several flags here, right? So, and again, this is a Harami pattern. It looks like we placed an example trade somewhere on this, came up, pulled back for all of one day, and then it's moving again. And if we were to measure how much of a move we think this might be, the way we could do that, and let me just use the drawing tools on the chart, is to come here and say, okay, this move, and some use the wicks and some don't, was about $21. So I am going to copy that. I'm going to duplicate that drawing, and then I'm going to come over here, say, I'm expecting this to go up to about 269.80. Well, I'm expecting this to go up to about 277. Now, where would the entry have been? Well, if you are comfortable with your candlesticks and you're going, well, this is, a hammer, at a potential support with this flag. And here was a close above the high of the low day of that hammer. So that could be considered an entry. Others might say, but yeah, that hammer was part of a Harami pattern. And so I could have entered at the end of this day. And some might say, but it's kind of run a little far here. And so you might just wait for this next pullback because it's been going in this upward channel. And others might say, well, you see that, but I also see that it's just recently broken above here. And if I'm looking to do that for a longer term investment, I'm just going to go ahead and enter a position now. But we do have earnings coming this week. And this is a stock that sometimes has a pretty intense reaction to earnings. So if we come back and we look, you might want to even look at a 2-year chart. Well, it gapped up here, and you may say, well, I'd hate to miss it if it gaps up, but you'd probably be grateful to miss it if it gapped down. And here that seemed to have a pretty positive reaction. But, here it gapped down, then it rallied, but then, gapped up here. So these are the decisions that you have to make, but noticing this pattern and then being aware when we're in the middle of earnings season is important. So Chris is asking if haramis need confirmation, and according to what I have read, they do not. And if you are new and you are saying like, what is this harami thing that she keeps talking about? Well, if you have a down day like this, and then you have an inside day where the body of the next day's candle is within the body of the previous day's candle at a potential support level, that's considered to be a bullish configuration. Now, is there a guarantee? There are no guarantees. If anybody tells you that something in the world of trading is a sure thing, run, do not walk. Because the next day it did pull down. It did actually go down. And you may be saying, well, so much for that idea. But, we had this inverted hammer, which at a support level is also considered bullish. And then it moved up pretty dramatically. And then we had another harami pattern here. So we had one here. And these are bullish when they are at a support level. So here was another one. So this body is within this body, and then it did move to the upside. This body is within this body, and then it moved to the upside. Now, does it work at the top of the house also? So here we have this big white candle, and then this body's inside this body. So that would be considered a bearish harami. And did it in fact pull back? Yeah. But this is a bearish harami indicating, within an uptrend, the overall direction of this stock has been up, in at least this time period that we're looking at. So you might be saying, this might be setting up a flag pattern. So there we go. Anyway, I hope that answers your question. I'm just looking at the questions. Do you use leverage on your accounts? Like by that, do you mean more margin? It depends on the type of account you have. If you have some type of a retirement account, like a 401k or a Roth IRA or something like that, they won't allow you to use leverage. I think that's that isn't a Schwab thing. I think that's, a legal requirement by, outside of Schwab by the regulatory bodies. But there are personal brokerage accounts where you might choose to use margin or leverage. But again, that's really not, that's really not the purpose of this class. Also, let me just scroll up. Yeah, earnings. Yeah. Yeah, we are in the middle of earnings season. Yeah. Yeah, I've already talked about, accounts and, risk and all that kind of stuff. So let's look at some other, just quickly. With Micron, we've got like some pretty impressive looking flags here. Big move to the upside, pulled back a few days. Big move to the upside, pulled back a few days. Upside, pulled back. But what are we seeing when we look at flag length? And I'm not saying, this means a ton, but, when I kind of look at this, I'm thinking, I should have erased the last time I did this. But, we have this big flag here. And, if we come back, and then this flag here, and then this one here, they seem to be getting perhaps a little bit shorter. And that may just be, something you may just want to be aware of. So you might say, well, if it pulls back again, then, maybe I'll just do a swing trade. And an easy way to measure it is to just go from this bottom. If we go up to here, well, that was a $54 move. And then this was a $46 move. And this was a $33 move. See how they're kind of, and this is a $32 move. So because of earnings and because we're seeing these flags occur just prior to an earnings announcement, you know, we are not going to do an option trade where things can, you know, get a little crazy. But if you wanted to add a stock to your portfolio, you might say, hey, if this continues to go up, I would like, you know, to add shares here of Apple, you know, but we haven't got an example where it's sitting where we don't have an earnings example coming up. You know, with CAT, we have an entry, but we also have earnings tomorrow. So you might want to just say, I'm just going to wait and see what happens with earnings and then consider an entry. Okay, but just if you wanted to see an example, we'll come to the trade tab. And what was our target? 544. And if we put a stop, and I'm not even going to do the math, but if you said, well, we'll put a stop 2% below that recent support level at 510, at, you know, so we'll put a stop at 499. So we're going to come to our trade tab, and the way we'd put that in is we'd say we're going to buy custom with an OCO bracket. So we want to manage our risk. And so we're buying it at the current price. Our target is 544, and then our stop would be at 499. Now, again, you know, this is an example trade, not a recommendation. And why is that? In this particular case, because earnings is tomorrow. So, you know, we could end up down $27 a share. And let's say we just decide we want to buy 10 shares. You know, this is a large account. We could make it 100 shares if we wanted, but you know, we could be down $27, $28 a share. And if it gapped below that, we could be down more. So it's important that we understand that. And so this is about a $5,278 position. We want to get out if it goes up by 16 or down by 28. And some might say, ooh, I want these to be at least 1-to-1. But it's just an example of a swing target possibility. Okay, guys, so that's a wrap for today. So here's my ask. I ask that you hit the like button. It helps move this up in the algorithm so more people can find this content. So I thank you for that. It's also a chance to do a favor for a random stranger without leaving your desk or your laptop, wherever you might be sitting. Subscribe to the channel if you haven't done that already, bottom right corner. That's where you can access all this content. If you have never been to a live event, and somebody had said this morning when I was, you know, hanging out in James's chat, you know, somebody had said like, geez, I would really love to be in Anaheim, and you're invited. You know, all you have to do is say yes. You have to register so we know how many people to make breakfast for and put the coffee on for, and we'll provide lunch as well. You know, but you've got to show, you know, sorry, I'm trying to talk and type because I'm going to just bring up where you can register for these. So you want to go to schwab.com/coaching and then come to in-person events. And so this market drive, the weekend before Thanksgiving, it's on a Saturday. It goes from, you know, what's happening globally and with interest rates and tariffs and all of that down to individual stocks. Then we're doing a 2-day technical analysis and options strategy class in Houston. This is introductory level. And then we're closing out the year in Miami with a 2-day advanced options strategy class. So consider yourself invited. If you'd like to come, we would love to have you. You just have to register, and all of that is complimentary. We'll even pay for your parking. We just won't pay for your hotel if you know you want to stay overnight. So guys, thank you for joining me. Look at some charts, practice, draw your lines, play some example trades in your paper money, and we will see you next week. Stay tuned. swing trading coming up next. Thanks for your help, Connie, and to everyone behind the scenes who helped bring this class to life. Bye for now.